Are you in the middle of purchasing or refinancing a home loan right now? That can be a stressful time right now. Whether you're a buyer looking in a market where there's little to no inventory, you're rushing, submitting offers, you're getting your hopes up, and you finally get your offer accepted. Or you own a home already and you're looking to refinance your property and take advantage of these historic low interest rates. Well, there's a number of things that have been coming up that have been causing delays and actually even killing deals. In this video, we're going to be going over the 5 things that are causing delays in today's transactions. The first time you're checking out our YouTube channel, thanks so much for tuning in. We talk about everything about real estate, mortgage, finance, anything about Las Vegas and Southern Nevada, we got you covered. So if you got any questions, drop some comments below, ask questions, because I love hearing from every single one of you guys and helping you with your home financing and your real estate goals. So let's hop into this list. There was a recent article by the National Association of Realtors that stated that 29% of all transactions have had a delay in closing, and only 65% were actually closing on time. But there were 5 things that they mentioned in the article that talked about why deals were taking longer to close. So let's hop into the list and talk about some of these reasons. The number 1 reason why transactions were delayed were issues with financing. Shocker, right? You're purchasing a house and you don't have your financing in place. That is why we always stress how important the pre-approval process is. I know some people still think that they can go find a house, then go talk to a lender, or they fight with the lender up front, not wanting to let them pull their credit, not wanting to provide documentation. So many reasons why we as lenders ask for all that stuff up front. And to me, if you're working with a lender that isn't asking you for that, that's a red flag. You should probably find somebody who's gonna do a thorough job, because look at that. You're talking almost 3 out of 10 transactions right now are falling apart. And of that, over 20% of that is due to the financing. So one of the most important things that I can't stress enough to you guys is to get qualified. Make sure that when you talk to your lender, he's doing a complete application. You're providing him all your paperwork, your bank statements, your tax returns, your W-2s, your pay stubs. These are the bare minimum and the essentials of what we need to make a determination as to whether or not we can get you financing. So when working with your lender, don't think that they're being nosy, because that's our job. We need to make sure that we give you that stamp of approval to say that when you shop for a house, we can provide you financing. And number 2 on our list, 20% of the deals are falling out because of appraisal issues. I've got licenses in 17 different states and I see this from across the country. There's no inventory. The buyers are getting desperate. They're offering above list price. And you know what? The sellers are well aware of this. And what are they doing? They're marking up their houses. If their true market value of their home might be $400,000, they might ask for $410,000 or $415,000, because guess what? They know that you as the buyer, you're gonna be willing to pay for it because you desperately want a house. The thing to keep in mind is it's okay if you have the cash and you wanna go above the appraised value of the home. That's totally fine. If you see the value in it and it means something to you that, hey, if I'm willing to pay an extra $5,000 or $10,000 above the appraised value because I know I'm gonna stay in this home and I'm gonna recoup my costs in the future, hey, more power to you. But the thing you gotta keep in mind is that as a lender, we will only lend up until whatever the appraisal comes in at. So if you're in contract on a house for $400,000 and that appraisal comes in at $390,000, we have to address that $10,000 gap. And it's either gonna come from you as the buyer, where you're gonna be willing to pay more money for the home, or you'll have to get the seller to negotiate and come down on his price, or maybe you guys meet in the middle. Worst case, you guys can't come to terms and you'll have to cancel and back out of the transaction. Now, the thing to keep in mind with that is your appraisal money, it's non-refundable, so you're not getting that back. And if you did any other inspections or anything on the home, that's also non-refundable. So As a buyer, you are invested into this transaction. By that point, you might have already spent maybe $1,000. And as far as your interest rate goes, same thing. The interest rate's tied to the property. So if you back out, you can lose that rate. I talked to a guy that went to another lender and they locked him in at 2.5%, but the lender didn't do a good job on his financing. And he's now in the 11th hour. He's having trouble getting his loan closed. He contacted me to see if we could still help him, which I told him that we could, but his interest rate was now probably gonna be somewhere around the 3% range. So again, guys, I know a lot of you shop around and the whole social media kind of encourages shopping, which is totally fine, and I definitely recommend you doing that. But the questions that we ask the lenders when we're shopping around is all wrong. I get asked every day, what's your rate? What's your rate? What's your rate? And look at this guy, for example, right? He got a 2.5% interest rate, which was better than what I obviously quoted him at that time, but now he can't close his deal. So how good is that interest rate to him? It's worthless, because if he doesn't find a lender who can close his deal, it doesn't matter if they got him 1%. He can't even close on the house. So when you're shopping around and you're asking questions to lenders and you're trying to figure out who to work with, like I've talked about before, find out, can they close on time? Look them up online. What kind of reviews do they have? To me, those things are way more important than what the interest rate is, because at the end of the day, the rate's the rate. Every mortgage company gets the money from the same place. Their funding's coming from the Fed, right? So nobody has an inside lane to get money at a cheaper rate, or they're gonna lend you, this completely discounted interest rate. It's just not possible. Every lender out there is gonna be competitive. Yes, you're gonna have guys that might be a little bit better today, but guess what? Rates change every day. And with the way the market's been the last few weeks, rates are changing multiple times throughout the day. So every mortgage company is under stress right now, under pressure with how to price their interest rates. So they're gonna do the best job that they can. And I can say that from across the board, whether you're an online lender or a mortgage company like us, every guy's gonna be pretty competitive, and that's the bottom line. But you gotta make sure that that guy can come through and close on your house for you. The third issue that comes up is home inspections. Now, one of the first things that you're gonna be doing as a buyer once you get into contract and the seller's accepted your offer is order a home inspection on your home. That home inspector, he's gonna go through that house like a fine-tooth comb and look out for everything that's possible in the property. He's gonna give you the good, the bad, and the ugly about the home, and probably come back with a 50-page plus report that's gonna give you a really good rundown of your property. Now, sometimes those reports, I'm not gonna lie, they look a lot worse than what they really are. But that's where you, as the buyer, can determine, do I wanna take on this home or not? Some of those repairs that they point out that need to be addressed, that's when you need to address that with your seller. And depending on the state that you're in and how many days you've negotiated in your contract, you have to be well aware of that as the buyer, because if you and the seller cannot come to terms with whatever those repairs are and what you're asking of them, that's your time to back out of the contract. Again, when you sign your purchase agreement up front, make sure with your realtor you understand what you're signing. Make sure you understand your contingency dates, because these are the things that you really need to be aware of, because once that offer is accepted, the clock's ticking and everyone's under the gun to perform, and make sure that you meet all the deadlines that are set forth in the contract that you sign up front. Issue number 4 is titling and deed issues. So you might have instances where maybe there's liens on the property that you were unaware of that you're only gonna find through a title company. So it's really important to work with a reputable company, because you wanna make sure they're doing their research on the home. There's no other liens or any judgments or anything that someone else is claiming that the property belongs to them. And that way, when you purchase the home, you're not gonna have any issues. You're gonna have a clean title report, and you can comfortably sleep at home knowing that you own the home, it's in your name. Nobody else is gonna come claim that they own this property that you now have purchased, because obviously that would be a complete headache to deal with down the road. So make sure you're working with a reputable title company, and usually your real estate agent will be the one to advise you and recommend who to work with. And again, most title companies, they're all regulated. They're all gonna have a pretty good reputation across the board. Their fees won't change much from title company to title company. But do your homework, do your research as you're searching out lenders and even real estate agents to work with, because the title company is gonna play a big part into making sure that you close on your home and that there's no other issues regarding the ownership of the property. And last but not least on our list is contingencies on the contract. Like I mentioned a couple of points ago, make sure that when you sign your purchase agreement, you truly understand what you're signing. There's so many times that I talk to buyers that they have no idea what their contingency dates are. The first contingency date you need to know is your due diligence period. A lot of times here in Vegas, agents will write about 10 days. So what that means is once you go into contract, you've got 10 days to do your due diligence. Now, if you're buying a more expensive home, maybe you might ask for a longer time frame. But that's the first thing you need to be aware of, because in that due diligence period, you want to make sure you order all your inspections. If there's a well or septic, or sometimes you need to get a pest report, all of those things, you want to do that within that time frame. Because again, if something comes back on the report that you don't like, maybe there might be mold or something else that you need to address with the seller, or there's just things and repairs that need to be done that you don't want to pay for, you want to address that with the seller as fast as you can, because if you guys can't come to terms with that, you definitely want to back out of the deal and move on to the next one. The last thing you want to do is extend your transaction for an extra week or two when you know that this isn't going to work for you. The second contingency date you need to be aware of is your appraisal contingency date. What that means is your lender would want to get the appraisal back within that time frame, right? So what does that mean? That means that when your contract's accepted, you need to communicate that with your lender. Hopefully, your lender's been in touch with you the entire time and knows that you're writing offers. There's a lot of times that real estate agents don't keep in touch with the lender because maybe they don't have a relationship or they're too busy. But sometimes it's the buyer that actually calls the lender to tell them that they're in contract. So if you lose a couple of days up front because no one's communicating, you could easily miss these contingency dates, therefore setting you up for failure. Because again, if you're pushing the issue on value on your home, you need that appraisal back as fast as you can, which means your lender needs the contract, you've got to sign your disclosures, and they've got to get that appraisal ordered as fast as possible. Because remember, we're in a busy market, right? Lenders are busy, realtors are busy. So guess what? Appraisers are busy. So they're not going to just go out to the house today and get the appraisal back, right? They've got to schedule time. And due to COVID, if it's tenant occupied or if people are still living in the home, they have to coordinate their time to go look at the house and make sure no one's there. So that adds another complexity to it all, right? So there's all this coordination that has to go on and everyone has to be on the same page. So that's why working with a reputable lender is super important, because it doesn't matter about the interest rate. Like I've said before, if they can't coordinate to get the appraisal back and you're getting it after these contingency dates, it kind of puts you in a bad spot as being the buyer. So that's why knowing your contract is so important. And another contingency date to point out is going to be your loan contingency date. And that means that you would want your loan approved within, again, that time frame, because God forbid your lender didn't do his work and his job up front, you have time to back out of your deal. That contingency does protect you as the buyer. Now, however, again, if you're not doing your job as the buyer and getting your paperwork to your lender, or your lender is just slow because he's a one-man band and doesn't have a team to help him, again, if you miss those dates, you're the one that's going to be in trouble, not the lender, not the real estate agent. Your agent will have to try to protect you as much as possible, but as the buyer, you're the one that put your earnest money deposit up, which again, if you don't perform based on the contract, could be at risk. So that's why knowing your contract is so important. And if you guys have questions, make sure you talk to your agent, make sure you talk to your lender, because again, we are gonna literally be talking to you almost every single day from the time you get your offer accepted till it's time to close. So remember, we're here for you guys to make sure that you don't end up in this 29% of people of having deals fall apart, whether it be your own doing, the lender's doing, or the property itself, right? So there's a lot of hands in the cookie jar. There's a lot of people involved just to get you across the finish line. So having the right team, the right people by your side is super important. Obviously, there's a huge positive side to that too, right? I mean, there's 60+% people that are closing on time. So there's still a handful of people that get the job done. but we want to make sure that you end up on the right side of the pie and not the wrong side. So I hope you guys enjoyed this video talking about some of the reasons why deals fall apart. And again, if you guys have questions, comment below. If I missed something, send me a text, send me a DM, send me an email. I love hearing from you guys. And if you need a second opinion, don't hesitate to reach out, because I want to be an advocate for you guys for home ownership and make sure that you get a fair shake on your new purchase or your refinance. And as always, thanks for watching, thanks for subscribing, and I'll see you on the next one.